AI is screwing Americans. What's up, everybody? Welcome aboard to Bubba's Bottom Line for Sunday, June the 7th. And here we are. Markets took a clobbering on Friday, but to open up with the headline, AI is screwing Americans. Now, I know we all love to run to ChatGTP or Claude or Grok or any of the ones that you run to and know how wonderful it is, how it's destroyed any real thought, how it's destroyed education. But that is not the screwing of Americans. The screwing of Americans is that we are paying for the functioning of AI, the amount of electricity that it takes to produce it, which if you look at your electric bill, it continues to go higher because, of course, we are helping finance these trillion-dollar companies that are building the AI. Not to mention the amount of jobs that we are losing. Now, of course, we know we just got a jobs report on Friday, which showed a growth of 172,000, which is total bullshit. That is looking at the U3, not the U6. And of course, if you look at the U6, true unemployment is about 8.2%. Okay, so this all ties together in a package. And of course, the package is simple. People that have lost their jobs up to this point, mostly due to AI, but people have lost their jobs. The average time to get a job back is 26 weeks. Okay. And then there's the period of 12 weeks where some get reemployed. Well, 12 weeks is you fall off the unemployment roll anyway, so it doesn't count. So that's why the government is able to maintain these ridiculous numbers. And you can bet your ass that these numbers will be revised next month, and we will see the overall struggles in America to get a job, to hold a job, and of course every warning sign out there is showing us that that is a problem. Now, of course, our president said on Friday stocks should be going way up with the great jobs number. Well, the stocks got clobbered, which we'll get into in our market report. But there are so many warning signs out there that the number itself was not true. And the way you know it's not true is because the unemployment claims remained at 4.3%. Okay, so again, this is a lot of the fuzzy math that our government uses. Okay, and just because you got a good jobs number, the markets are a little bit overvalued anyways. So again, one, as we've said here many times before, has nothing to do with the other. Peace talks stall. U.S. denies Iranian claims of warning shots at destroyers. Look, until our country takes out Iran, there is never going to be a deal. Okay. They don't make deals when you're dealing with fanatics. Okay. And that's, what is that, 1 or 2% of our Iran is the fanatics that actually run the country. You know, this goes back to, if you go back to Venezuela, Chavez and Maduro. Okay. I mean, Venezuela was the one place that socialism could have actually worked, except that Chavez and Maduro stole all the money. The smaller percentage that run the country, no different than China, I mean, anywhere else. So at the end, you have to get rid of that sect. You have to take care of it, and you have to really take over the Straits of Hormuz if you want to really bring true peace to that area. So I mean, peace talks. We've been going on. This was supposed to be a month war. We're now going on almost 3 months. So again, it's not going to work the way we think it is. The headlines are bullshit. You can see it happening. You can watch what's going on, and of course, ISM services prices up for 100 straight months now. All that means is you're paying more for goods. It means inflation is on the rise. It means that rates are on the rise. So all that talk all last year about rate cuts, now you got to worry about rate hikes. I don't think worry is the proper word. I think when you look at it, rate hikes would be healthier for the economy anyways. The trying to cut rates into markets that are soaring is foolish. Okay. And of course, I think President Trump is learning that his choice, Warsh, was maybe is not quite in the same field as he is because Warsh is a little bit of a hawk anyways. Uh, Demented New York Democrats erase mother from state law and replace it with just gestating parent. Okay. I mean, does it really matter? I really don't understand some of this shit that goes on. I mean, again, I'm tired of the pronouns and the changing and mother and father. Okay, what is wrong with that? I don't understand it. Okay, um, we've got electricity pricing, which we talked about. They're jumping monstrously throughout. The market is starting to look like a price in something that most people don't see. Well, what most people don't see is if you go back to 2008, if you go back to 2001, all these massive overvaluations, all of the ignoring of warning signs. Let's look at some of the warning signs. 13% of people are 90 days or more past due on their credit card. 6% are past due on their auto loans. 4% are past due on their home loans. Those are warning signs. When people can't pay their bills, they are not going to be able to invest. So once again, we're ignoring the warning signs that the market is putting out there. Again, I'm not telling you that we're going down. And again, we'll talk more about it in our market report, but I am not trying to share with you. I'm telling you that there are warning signs that this economy is nowhere near as good as you think it is. We are in a recession for the majority. The minority, which is the voices you hear from, okay, telling you how good everything is not factual. That is what we have to understand is that for the average American, they are struggling. They're having trouble buying food. They're having trouble putting groceries on the table. And if you lose your job, how long will it take to get a new one? And again, jobs are leaving. Wendy's closed 350 stores. Jack in the Box closed 150. You've got sporting goods stores closing. You've got all kinds of retail going out of business. Okay. You had Meta that had 14,000 jobs, 6,000 that were available, 8,000 they laid off, and they took off the 6,000 that they were going to hire. So that's really a net loss of 14,000 jobs. Where are these jobs going to get replaced? Who's going to replace them? This is the bigger problem that we have to understand. Again, what does it mean to the market right now? Nothing at the moment. What does it mean to the economy? A lot. Okay. Because we're seeing closures everywhere. And these are just off the top of the surface. This doesn't count the small places that have gone out of business. But each time we lose a business, we lose a place for people to work. Okay. That's a bigger problem. And you add in that when you go to like a Walmart or a Home Depot or one of these huge big box stores, they got no help anyways because they don't want to hire anybody. So think about it. The warning signs are clear. There's a lot of issues out there. I am not telling you that the markets are going down. I'm telling you that there's a warning signs in the economy, and you better take heed. You better look at it, and you better make sure that you're putting some dough away because it looks to me that some darker days are coming before we get to the other side. In the meantime, this is Bubba's Bottom Line. It is Sunday. It is June the 7th. We'll step out here for a break and we'll come back with our market report right after the break. Bubba's Bottom Line. What's up, kids? Good morning. Hope everything is well. And of course, Daily Trade Finder. We didn't make any, we actually made one trade last week, but we're doing very well, up about 14%. And of course, it's just making daily spreads. It's great for those who trade in themselves or trade in prop accounts because their trades are over in a day or less. In the meantime, don't forget our brokerage partners. And again, I do have other brokers, so just full disclosure, but trader brokerage, $10 a month. I mean, I don't know how you can pass it up. I mean, it saves me $100,000 a year in commission. And of course, Capital Trading Group, our partner with Emergent Edge and other products. And of course, Emergent Edge is killing it. So it's been really good. And of course, our Joy of the Mom partnership, really a good site. Please check it out. And of course, our high school program, where we're trying to help our high school kids get literate. So maybe we can get out of these problems in the future. And of course, let's get back to Bubba's Bottom Line and our market report. Welcome back. It is Bubba's Bottom Line. It is Sunday, June the 7th. And of course, you do our market report and give you what's going on. And of course, obviously, Friday, the markets got absolutely clobbered uh, after that monstrous great jobs number, which goes to show you what we talk about here all the time is that a good jobs number, a good economic number does not necessarily translate to an opportunity that makes things better. It just tells you what the facts are. And again, we've said forever, there's warning signs in this market, there's problems. And I'm not saying that tonight we're going to open lower or tomorrow we're going down. I'm saying that there are warning signs in the market. And I would certainly think that we're on the way to the downside now. There'll be rallies. And there may be a rally tonight, tomorrow, Tuesday. There will be big rallies. Okay. But I think net of it, a month from now will be lower than we are today. Okay. And if you want to hold me to it, okay, you can benchmark the S&P. Okay. Actually benchmark the spider because the S&P is going to roll over next week into the new one, so it'll be a different price. But benchmark the spider 737.55. Okay. That'll be our benchmark a month later, a month from now, when we have our first Bubba's Bottom Line in July. I say we'll be lower than we are today. So we'll see what happens. In the meantime, the markets they were doing fine, but had their busiest volume day in 6 months on Friday. Okay. The Nasdaq got clobbered down about 1,600, which is about 4%. Okay. The S&P was down 2.5%. The Russell was down 3.5%. The big winner of the day was the Dow. It was only down 1.4%. So again, but huge volume. So that would indicate you might see a quick bounce here before selling will resume. I do think selling will resume, but I do think there'll be a bounce first. In the meantime, the dollar did push over that dollar point here. We are at par. If we don't have a position, but if I would, I'd be looking to sell it. The euro currency got smushed, which we're short. Bonds and notes got smushed, which were short. Again, interest rates are going higher. I don't care what anybody says. Okay, they're going higher. Bitcoin broke down to 60,000. Again, very ugly picture. New recent lows. It looks very ugly. I mean, we're fans of Bitcoin. We have no position. I would suspect that this week we'll be looking to probably buy some, but we'll see. Gold got crippled a little bit again, down 150 on Friday. Look, at the end of the day, the gold looks bad too right now. But one of the things we do know is when assets start to go down, they sell everything first and ask questions later. We are long gold, but doesn't look very good at the moment. Silver and platinum. Silver's under $70, which is interesting. Platinum is under 1,800, which is again, we don't have any position there, but interesting. Copper got hammered. Uh, and of course, the grain markets look like they're in a little bit of trouble. And we're long grains. Look, I like being long grains. I think there's a great probability that they're going higher. But this is, again, you're getting into some areas now that are a little bit challenging. The cattle markets continue to just sit around, haven't made the commitment yet. Looks like they're ready to go down. Hogs looks like they're headed a little bit lower. Nat gas, moderate. And crude oil down to $90. We're flat all those. But at the end of the day, I think there's a great chance you'll see crude back around under 80. I think you'll see some selling. I think grains are a place to buy if you're looking for something. But overall, I think it's time to be very cautious on look and find some good opportunities and make sure the trades you make are of high probability, which means that they're overextended and you're taking the opposite side. So that's the way we see it. This is the market report. We're going to step out here for a break and come back with our commentary right here on Bubba's Bottom Line on Sunday, June the 7th. What's up, kid? Just a reminder of our sponsors. First of all, remember Daily Trade Finder. Our sponsors, Traded Brokerage, Capital Trading Group, The Joy of Mom, and our high school program. And let's get back to Bubba's Bottom Line and my commentary. Welcome back. It is Bubba's Bottom Line. It is Sunday, June the 7th. And of course, being on Medicare, me being on Medicare, I find it comical and ridiculous at how stupid our government is and the programs that they run and the things that we have to do. It's interesting. I've had some, if you haven't noticed, I've had some Band-Aids on and stuff. I had some Mohs surgery, and I need more than one. Uh, so because of Medicare and because of the way they cover things, I have to go back for each one individually, okay, so that the doctor can get full value and full pay to get each one. I have nothing against the doctor. I think that the way it's set up is what Medicare is saying that they don't have any value for my time, okay, and that they want to pay more for the surgery when if they paid a little bit more from the beginning, they could do it all at one time. I mean, the things that I need done could have been done in one office visit. And of course, it's going to take me 3 to 4 office visits. It's the same as that I have to go for certain blood pressure medicines, you have to go to the doctor to make sure. And I have no problem with the doctor so far, but I have a problem with the way the Medicare system works because they're creating, in my opinion, more expense to the government, to Medicare, when they could figure out a way to create less expense and make the Social Security system, the Medicare system, be more efficient and run better. Okay. And I think everybody would be happy with it because of the way that they run the whole system. They run it like the Ponzi scheme it is. And I think that this is, you want to talk about problems in government. This is the entire problem that we watch is that we don't do things efficiently. And Medicare is just the start of things because you have to do certain things that that make you cost Medicare, not me, cost Medicare more money when we could do it in a much better and more efficient way. And wouldn't it be better if you were able to get some of that money in your Social Security check versus having it pissed away through the Medicare system? There's a lot more to this, but obviously I don't want to bore you all day. But I think you get the gist that the system is fucked up along with Social Security, and people are not getting enough benefit for the system because the government itself does not want to fix the problems. And that's the way I see it for today's Bubba's Bottom Line. Have a great weekend, everybody. Thank you so much for being here. We'll see you back here tomorrow with Bubba's Daily Update, and of course, next Sunday with Bubba's Bottom Line. Adios.